Recyclico, making lithium-ion last forever. Recyclico's patented recycling process achieves up to 100% recovery of battery metals from lithium-ion batteries for electric vehicles, including cobalt, lithium, nickel, manganese, and aluminum. Recyclico Battery Materials Incorporated trades on the TSX Venture AMY, on the OTCQB AMYZF, and Frankfurt ID4. For more information, visit recyclicode.com or phone us at 778-574-4444. Recyclico, making lithium-ion last forever.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mark Leibovit, editor and publisher of the Leibovit VR newsletter, also known as VRTrader.com. He's speaking to us from Arizona. Well, welcome back to the show, Mark.
Glad to be here, Jim. Thanks for having me.
Do we have a special offer for our listeners?
Yeah, let's do our half off at VRTrader.com. We use the old code 2022 half off, just as it sounds. 2022 HALFOFF, and you get to subscribe to any of the newsletters at a 50% off rate for whatever time frame you choose. And also, I just want to disclose that I'm not a financial advisor, just a newsletter writer, nor do I provide financial advice.
And what kind of newsletters do you have?
Well, we have covering different sectors, but the main one is VR Platinum, which covers all the major markets. That's one I encourage most people to sign up for because most of everything is covered in there. But we do have a sector newsletter, for example, the Canon letter for the cannabis markets, which has trading opportunities, and obviously it's been out of favor for a while. But there was a nice trade there in recent weeks on the hope that marijuana would get rescheduled and the Banking Act would get approved in the U.S. So that sector is not dead. It's been dead for a while, but it has good trading opportunities. We also have the blockchain letter, which has been hot with Bitcoin and Ethereum and XRP and COIN, which is the big coin platform stock, and that's been doing well. So that's another choice, I suppose. And we have our metal resource letter, which focuses again on precious metals and oil and uranium and any type of energy type play. Coal would be in there as well. So we have. Just go to the website VRTrader.com. You see all the pretty pictures up on the screen, including my book, by the way, which we really don't talk about. When you click on that, you generally have to go to Amazon to buy it, but it's called The Trader's Book of Volume. And it's about 400 pages covering the major volume indicators that I thought were important to discuss, and it's consolidated in a very easy to understand book. Of course, my own technical tool, the volume reversal, is one of the chapters in there as well.
So the Fed paused on hiking interest rates. How did that affect the markets, and do you think this pause is going to continue in the new year?
Well, it appears so. Jay Powell, who's done a horrible job in running the Fed here in the last several years, as we've seen, keeping rates near zero and then jacking them up really fast. It reminds me of Alan Greenspan back in the late 1980s. We used to joke and call him or compare him to a New York City taxi cab driver. He would slam on the pedal, accelerate rates, and slam on the brake, and then go the other way. And he went back and forth over a period of time. Powell hasn't been as erratic short term, but keeping it at zero and then hitting the accelerator the way he did, so to speak, and jacking rates up. It wasn't done intelligently. His bad advice for many years, and there's a lot of political pressures involved here now, short term as well, with the election this coming year. And we all, at least I'm always under the belief that the markets are basically manipulated. You can see they're manipulated just by the actions of the Fed alone, but we've got the U.S. Plunge Protection Team out there and the Equity Stabilization Fund, which is part of the Gold Reserve Act back in 1934, and we keep talking about this stuff, which nobody really pays much attention to, but these are forces out there that move markets, and, there's no accident that rates, surged to percent on the Fed funds rate, and it's also no accident that if you check the money supply, that Powell really didn't bring it down that much the way Paul Volcker did back in 1980, which really did damage to the economy, and rates soared. But the pulling back the money supply and making credit more restrictive back then, which didn't really happen now, caused much more serious reaction in the markets and to the economy. So, he's playing with some of the tools, not all of them. And I don't think Powell's involved with the plunge protection team. I think that's the U.S. Treasury, but that involves stock manipulation and buying, the Dow futures or the S&P futures or even individual stocks. So, of course, we've seen this going on in Japan for many years, and I think the U.S. taught them what to do since they pretty much manipulate the markets over there the same way. But to answer your question, we saw and predicted a Santa Claus rally. I mean, this is no great surprise. You can look at it on the charts for decades. U.S. Thanksgiving tends to be a positive time as well. Seasonally, you generally look for a low in September, October. That happened. It's sort of textbook type stuff, Jim. There's just a question: can you stick with it? Do you get in there and just buy October and wait for the rally and then sell? And that may happen. It depends how exuberant the markets become here in the next couple, 3 weeks. It's really interesting because you could argue that if they overdo it here, that it could be all over. I mean, there's some theoretical targets in the S&P, up toward the 5,000 area, and that's still a couple hundred points away. But if they want to really take them up big here and make it and give everybody a Merry Christmas and a Happy New Year, they could really have overdone it, and come January and into the first quarter, we could pay the price for it. So, that's just a technical comment about the way the market's trading. We'll see how crazy they get here. But I called upon Alan Greenspan's old term, irrational exuberance, here just a moment ago. I mean, that's sort of what's happening here. Everybody's sort of going crazy. When we all knew this was coming, we knew we were going to get a rally now, and they're attributing it to Jay Powell and the Federal Reserve, but seasonality and technicals indicated we were going to get some type of rally here. So the question is, how much will they overdo it? How exuberant will everybody feel? Will they get drunk? And then we'll have, hangover come early January, as I just mentioned. So the answer is they're playing with the rates. The truth is Powell is sort of the dog, and the tail is being wagged by the tail, so to speak, with the Treasury market, because Treasuries, the interest rates have been dropping for a while now, and the bond market has been rallying. So the tail is wagging the dog because the bond market has been telling you rates have been going down for a good month or so here. If you just look at the charts. And who's running the bond market? Well, that's the free market. That's not the Federal Reserve, which I always argue that's why we don't need the Federal Reserve. We just need a free market, because ultimately that sort of dictates what's happening anyway. Free market's more powerful than the Fed, and so there's no surprise there. And what is the reality? I mean, we really don't know, because the numbers we get from the government are lies. We don't really get honest numbers. They're revised all the time. The only numbers I believe that come out of industry that don't come from the government. So we don't know what's planned for next year, but we do have the politics with the election coming up, and you just wonder, what games they're going to play or not play next year. But, the thought would be, well, keep interest rates from going higher again, just on a political basis, and we'll sort of take it from there. I don't believe the numbers. They say inflation is down, or they believe inflation is up, or job reports are up or down, or the labor statistics. I just don't go for it, because I just don't believe them. We have other researchers, economists out there who consistently report much different numbers than you're getting that way anyway. So what do? You play the seasonal patterns like I just described. It was sort of a no-brainer, but by October and wait for the Santa Claus rally, and we tend to get low points in the first quarter of the year. Typically, of course, nothing is exactly the same, but when you get into the February-March period, you tend to get a correction in the markets. So that's sort of probably what will unfold, and meanwhile, we're just playing individual opportunities as they come up. We've had a bunch of individual stock names that we've mentioned in the newsletter that have done well, and there are a lot of sectors that have done well here, and it's just a question of sort of following where the money's flowing. Where is the bull market, and or if you want to short, just what's going down. So it's just the fun and games, and that's what we enjoy here at the VR Trader Service. It's the horses out of the gate every morning, Jim. What's running and what's out there to play.
What's going on with gold?
Well, gold had a funny sell-off about a couple of weeks ago now, where we explode to the upside. It's really. I'm just laughing to myself about the way markets are manipulated and the way things move. I mean, we had a triple top in the gold market now for the last several years in that 2070, 2080 area. I'm referring to U.S. dollar pricing. And then it explodes through there, goes to, I believe, 2157, then immediately collapses almost $200 off that level, and turned up here with the stock market the last few days on the interest rate story. So this is why I kept saying, when you kept asking me about gold, will it take out the triple top? It did, but it didn't stick. But it did. There was a trade there, I guess, for a very short few hours, because it happened, I believe, in overnight trading, and now back down again and starting to rally again. So it's like any market. It's a trading opportunity. Go up to 2,000, 2,100, you sell off a couple $100, and you go back up again, back and forth. But the bulls will argue that this time is different. I don't know if that's the case. If you own gold, you hope that's the case, and that government expenditures, depreciating currencies, geopolitical events, dishonesty in government, and so forth, ultimately break the restrictions that have held gold back, and we really have an honest move. This applies to silver too, and we see it move up steadily. We know on a inflation-adjusted basis, gold is decades behind where it should be. It probably should be $5,000 to $10,000 an ounce if the government wasn't in there playing with the pricing, and that's been an ongoing unfortunate event that's not really discussed very much in the media at all, but government's been actively involved in suppressing the price for many, many years, and there's a lot of documentation to that effect and lawsuits that have proved that the manipulation has occurred. So if that can all break and change, and we can get a free market going, then maybe in the next few years we'll see gold appreciate. You've got big governments, big nations, China and Russia, out there accumulating gold, dramatic ways. And you've got the BRIC nations group now, which is now apparently going to incorporate about 80% of the nations on Earth who want to create an alternate currency backed by gold. So it would appear that, we should be bullish, that, longer term, that it should appreciate. And history sort of backs that up. I mean, back in 2000, gold was around that $200-300 level. And where is it now? 2,000. So in 20 years, it went up 10 times. And if you want to use that same relationship again in the next 20 years, it goes up 10 times. You got $20,000 gold. So I'm not saying that will happen, but anything is possible with the volatility of the markets. I mean, we didn't even ask me about crypto, but, look what's happened with Bitcoin in the crypto market, and that seems to be getting stronger in terms of investor interest and institutional interest. So fun times ahead, Jim.
We'll have more with Mark Leibovit right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Mark Leibovit. Mark, what's the story with crude right now?
I was just hoping you would ask me that. Well, we were looking for a cycle low in mid-December, and I think we hit a bullseye here. As it turned up, it was actually, our date was December 14th that I put in the newsletter to look for a possible low here, and just everybody and his brother were bearish on oil prices. So we had a bounce here the last couple of days, and if the cycle low works, hopefully the worst is behind us. And of course, my favorite stock, I keep talking about this in the oil market, is Warren Buffett's Occidental Petroleum. And in fact, just today they announced that they were acquiring even more stock in the company for a lot of reasons. I believe because he believes that crude oil ultimately is going to be dramatically higher in the years ahead, and they have a long time fuse in terms of their investments. But Oxy popped here nicely, and it's one of the names that we discuss in our newsletter. I think I don't have the percentage for you, but somewhere in the mid 25, 26, 27% area is what they control the stock. So ultimately, it's going to go higher, and who knows of what plans they have, but it would probably go higher even if crude oil didn't go much higher for other reasons, because it's got a big stable cash flow and other fundamentally positive factors. In any event, hopefully crude oil hit that cycle low, and now we see how much of an advance we could get here into the new year and beyond.
On the geocosmic front, friend of the show and our guest on This Week in Money this weekend, Eric Haddock, says he follows all these cycles that affect interest rates, conflicts on the planet, and also solar weather. And he said next year we're going to see a peak in solar activity and solar storms and sunspots and so on. What's your feeling on that? Are we going to see major interruptions, say, to satellite service or for our power grid?
Yeah, well, and if you go to a website, which I track, and it's public information, it's called spaceweather.com. And I don't know if Eric, looks at this. I'm sure he does. They just reported one of the strongest solar flares of the current solar cycle in the last couple of days here, and it erupted on, today. In fact, they referred to December 14th. So they called it an X2B class solar flare, and they say the strongest flare of the solar cycle so far. So, from what I'm hearing, solar cycles could peak and get stronger into next year, and people sort of joke about it. They think that they're impervious to Mother Nature, but if something dramatic happened and we got a repetitive Carrington type event, which we've discussed before, that big solar flare in the mid 1800s, you talked about it yourself. We could wipe out a lot of electronics and internet and disrupt the planet. So it's like anything else, hurricanes, earthquakes, tsunamis, shifts in the planet's crust, all these things, these have happened, will continue to happen, and will we see it in our lifetime? And these are the ongoing risks on planet Earth. And, many argue that high civilization has existed on this planet, many, many years in the past, thousands or even million years in the past, and was wiped out by some, geologic event, whether it was solar or a planetary polar shift or a shift of the plates on the planet or something, or an asteroid. So they're retrieving artifacts now that support the theory that there could have been high technology and civilization, and we're just another blip in the history of the planet, and we think we're at the top of the heap, and overnight we could be wiped out, and then 100,000 years from now another civilization emerges and repeats what we're doing. So Elon Musk is right in trying to go to Mars. No planet is safe. The asteroid belt was probably a planet at some point that blew up or was destroyed in a war or who knows what. So on the big picture mega time frame, the Earth's not safe, or any planet is not safe. That's just the forces of the universe. In any event, we take it day to day and we monitor it, and it's fun to monitor this stuff, and we sure pray and hope that we won't get caught in one of these cosmic disasters. But it's certainly intriguing to study it and follow it, and I appreciate you bringing it up. It's something I enjoy as a hobby, and it's just fun to monitoring. It's like the weather, just something it's fun to do, to monitor all the patterns. But thank you for raising the subject.
Mark, thank you so much for chatting with us.
It's always a pleasure. Thanks for having me.
My guest has been Mark Leibovit, editor and publisher of the Leibovit VR newsletters, also known as vrtrader.com. And if you have any questions for Mark, you can send them to info@housestreet.com. Find us on X @HouseStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.